Do you have a fixed deposit in a bank and do not file your IT returns? Then you could actually be getting lower interest than what you have signed up for. For example, if your bank FD interest is 7%, you could actually be getting lower than that if you do not file your income tax returns. I'm Sandeep, the founder of AshEka Financial Planners, and in this video, I'm going to show you how you're actually losing out on a lot of money if you're not filing your IT returns and claiming your refund. If you have a fixed deposit in a bank, the bank credits interest to your fixed deposit account once every 3 months. Basically, the interest is compounded every 3 months. So let's say you have an FD of 1 lakh rupees at 7% interest. Due to the compounding factor, compounding every 3 months, you'd actually be earning a little more than 7% at the end of 1 year, maybe about 7.18%. However, if you are someone who does not file your income tax returns, then you may actually be getting lesser than 7%. How is that possible? I will show that with an example on this Excel sheet. Right, so having a look at this Excel sheet, I've mentioned the invested amount as 1 lakh, 7% is the interest rate. And every 3 months, the interest is being paid to your account. So the interest is paid based on the number of days in that particular quarter. So in the quarter January, February, March, you have 90 days. In the quarter April, May, and June, you have 91 days. In the quarter July, August, September, there are 92. And in the last quarter, there are 92 days. So let's assume you open an FD on the 1st of January. And what is the interest you will earn in the first quarter? So let me put the formula there, is equal to 7% of 1 lakh for 90 divided by 365 days. The number of days are calculated, right? So you have interest of 1,726 that gets accrued in your FD account. The bank will deduct TDS at 10% if you have submitted your PAN card. If you haven't submitted your PAN card, they are bound to deduct 20% TDS. But most of the banks nowadays insist on a PAN card. So let's assume your PAN card is mapped and your PAN number is mapped and the TDS is at 10%. So that is 10% of this, and therefore the actual interest that is paid to your account or accrued to your account is the interest earned minus the tax deducted at source, and this is the actual interest that's being paid, 1553. At the end of the quarter, your principal plus interest would be 1 lakh plus the interest that you earned. Now, at the end of the next quarter, you would earn 7% of the new amount, that is the principal plus interest, into, let me just quickly go there, is equal to 7% of the principal plus interest into 91 days divided by 365. So that's 1772, and the TDS, of course, I'm going to copy the formula here. It is 177, and the principal plus interest now would be, this would be the principal, 101553 plus 1595. So this will be the compounded amount at the end of June, the second quarter. Similarly, in the third quarter, you get 7% of this compounded amount into 92 days divided by the total number of days in a year, 365. So 1820. Again, let's check out what the TDS is and the net amount that is going to be paid out to you. 1638 is the net amount, and once again it would be 1638 plus the previous compounded amount This would be the total amount at the end of September in your account, 104,786. Again, at the end of December, you would get 7% of this compounded amount for 92 days out of 365 days, which is 1849. And I'm going to copy the formula here to this area. So this 185 is the tax deducted at source, and the net amount paid to you would be 1664. And finally, the amount at the end of 1 year is 1,06,450. Now, what is the total interest that you earned? Is equal to, this is the principal plus interest minus your invested amount, is actually 6,450, and obviously the percentage is 6,450 divided by the amount you invested into 100. 6.45 is the percentage that you have actually earned. And what was it that you were believing that you will get? You are believing that you will get 7% for your FD. So why is this? So now the bank has deducted TDS, right? They deducted tax, all right? These are the amounts. This amount, a sum of 717, is deposited into the government account. And now if you're someone who doesn't fall into the taxable salary bracket, then you would have to claim a refund of this amount, 717. And if you had added that 717, the interest would have actually crossed 6,450. Let me put that here, is equal to 717. And if you had saved that tax by a refund, then you would actually be earning 7,167, which is 7.16%. Now, how do you avoid this situation? If you do not fall in a taxable bracket, right? So if you don't have to pay taxes at the end of the year, typically parents who do not have any other source of income, who have FDs, and they do not file ID returns, end up in this situation. Option number one is to submit form 15G or 15H to your bank in the month of April every year. 15G is for those below 60 years of age, and 15H is for those above 60 years of age. Basically, this form is telling the bank that I do not have any other major source of income and I wouldn't fall into the minimum taxable bracket. So therefore, please do not deduct any tax at source, and the bank wouldn't deduct any tax at source, and you will get the entire amount. The second option, of course, if you haven't done that, is to file your IT returns and file your tax returns, and then obviously you can claim this as a refund if you do not have any other source of income that is, making your total income go above the minimum tax slab. So I hope you understood this, how important it is to file your income tax returns if you have fixed deposits, or at least if you're not someone who is having any other source of income and FDs are your only source of income, then submit form 15G or 15H in your bank every April. I hope this was informative. In my next video, I'm going to be telling you why it is such a poor idea to be investing in a bank fixed deposit if you're planning for some long-term goal. The problem of inflation is very serious, and I will explain to you why many of us who've invested in bank deposits hoping to get a big lump sum at the end of a few years are actually losing the value of their money. Thank you for tuning in. I'm Sandeep. This is AshEka Financial Planners. Please subscribe to our channel and share this video with everybody you feel needs to know about this. Thank you very much for tuning in. See you soon.